G'day folks, and welcome back to another edition of the Rough Consensus podcast. And I just had an absolute ripper of a conversation with Travis Kling from Ikigai Asset Management. Now, Travis has been around the crypto and the Bitcoin space for a very long time. He's an astute observer of how the market and the social or technological elements all intersect. So it was a really interesting conversation. We covered everything from the change in administration in the US to the macro drivers and the impacts, where Bitcoin fits into the picture and how we think about cycles and all that type of behavior. And we also go down this widening divergence between Bitcoin and the crypto space, how there really is a struggle to find too much product market fit and what it means for the overall market moving forward. I think you're going to really enjoy this conversation. Let's get stuck straight into it. G'day folks, welcome back to the Rough Consensus podcast. And this is a conversation that's long overdue. Travis Kling, mate, welcome to the podcast.
Glad to be here. Yeah, we had this been talking about this for a long time, I think.
Yeah, there's been a few concepts of Twitter Spaces and all the rest of it, but I think you and I've certainly learned a lot from yourself. I think your views on how this market trades, Bitcoin, crypto, macro, and it really is that part of time where Bitcoin is now a macro asset. The whole world is looking at it, and it has so much signal baked into it. I know you've spent a lot of time around the on-chain data, so we're going to cover all these topics, but I actually want to start with, from my perspective as an Australian, when we look at what's going on in the US, I mean, obviously being the powerhouse of the world, there's a lot of structural shifts going on. So I'd love to get your perspective from inside America for someone like myself. What are you seeing with the new administration? How do you think it's going to change not only the Bitcoin position, but also just the macro position of where the world is heading?
Yeah. The Trump administration's relationship to Bitcoin is just a tiny slice of the enormous change that has just occurred with this election. And I think you can't really overstate. Now I'm going to tip my hand a little bit here, but that's fine. I don't think you can really overstate how the magnitude of the unfucking that America just did. We had been doing this multifaceted, slow devolvement. It was coming from a lot of different ways. And I, like a lot of other people, I was of the view that the magnitude of the election in November, the consequentialness of the election was just hard to get your head around because, there was this view we were letting in so many illegal aliens. And then there was good data to back up that they were pushing a lot of these illegal aliens into swing states and then starting a rapid process of legalization to get these people eligible to vote. And by they, I mean the left. And there's just a lot of stats to back this up. This isn't some crazy conspiracy theory. There's hard data on the swing state level at this. And that the timeline was around 4 years. The accelerated timeline to citizenship was around 4 years. And they were doing it through this very specific government app that they had co-opted. And so there was this, what I think an extremely, coherent and likely hypothesis that if the Democrats had won in November, you would have gotten 4 more years of this craziness with the illegal immigration, and that you would have gotten so many illegal immigrants registered to vote in swing states that we just wouldn't really have had a 2-party system in America anymore. And then it would have been a 1-party system. And now it's just people fighting out for whoever gets the Democratic nominee because you would have pushed so many, you would have changed the swing state voting so much. You're probably aware of this, but just because you're in Australia, it's really only kind of like 6 states-ish that matter in the election. And then you're really only talking about like 1 to 3 counties per state in the swing state. So you are talking about somewhere around like 20 counties in the United States that kind of like decide the presidential election. It's kind of crazy, but that's just the way it looks. And that's how you can have something like, well, you put 50,000, 100,000, 150,000 all one-way voters into a particular county, you swing a whole state, and there's only a couple of these states that matter. And so that just made November huge because of that. And then obviously we get a red wave. Trump wins all the swing states, wins the popular vote. There's still a lot of voter fraud in the 2024 presidential election, a lot. Not to the magnitude, of course, of 2020, but there was still a lot of it. But what we really just got was the dawn of a new day. And I think being a guy, my whole career has been in markets. In markets, you really try and bring your highs down and bring your lows up and just try and stay steady. Here, there's a Public Enemy line. Don't let a win get to your head or a loss to your heart. Love that line. So I have been cautious to try and not get too, I'm so hopeful. I'm unbelievably hopeful. That was true before the inauguration. And then, we're a month and 3 days into this
it's kind
administration.
Of wild, actually. Just crazy. That fact. A lot has happened in a short time.
That's right. We're about a month in. And the magnitude of the change that we have seen in 1 month time is, it makes me even more hopeful. It's incredible. I'm just completely over the moon about it. And yeah.
It's interesting because you like I've certainly seen the reverberations. Like we're a long way behind this phase in Australia. Unfortunately, we have a two-party system, but it's kind of one party. They have very much the same views, and they're probably not going to fix a great deal. But we've started to see these shifts. Like Germany's now changed government. Canada looks like it's going to change government. There's been this echo through the whole world. And what I find interesting, a principle that I always use is that markets, they can go up and down on good and bad news. That doesn't necessarily matter as much as uncertainty. And when the market's going through change and it doesn't know how to price stuff in, that's usually where you get these really wild swings. What's your view been on how the market's responded? Because we've obviously seen the dollar strengthen quite significantly. But then there's this interesting backdrop of a strong dollar starts to break everywhere else. And there's all these interesting dynamics around how everyone else is affected. If the rest of the world catches a cold, the US will probably get a sniffle. What are your thoughts on those dynamics?
Yeah. I think a lot of the stuff I was alluding to there earlier, I was kind of talking about more of the social side of things, but there are very big, macro impacts to this. And I think the way that I think about it is bucket it. So Trump has now issued, I don't know what the latest count is, something in the neighborhood of 50 executive orders. And not every one of them has a economic impact. A lot of them do have economic impacts. There's also just other stuff kind of coming down the pipe, whether it will be from the executive branch or through legislation that's going to have, a major impact. A lot of them have cross currents. When you think about all of the mandates that the Trump administration had, and then now a red wave has, there's a lot of cross currents to them. And so I think about it from the perspective of what does it mean for GDP growth? What does it mean for inflation? What does it mean for deficit debt levels? Call that the same thing. What does it mean for the labor market? And if you just think about all the things that they're doing and planning on doing, it's a lot of cross currents across those four buckets. And I won't pretend, and there's also staggered timelines about these different things being implemented. And there's questions around, does it actually get implemented? To what degree does it get implemented? Tariffs are a great example of this, right? Just at the beginning of this month, we had this big freak out that lasted, 48 hours or something like that around tariffs. And then Trump pushed it back a month and they pushed it back another month. And so, tariff, you can talk about the potential economic impacts of tariffs. And then you can think about, okay, well, what about, all the illegal immigration stuff being walked back? What does that mean? What does all the Doge stuff mean? What does all, there's lots of different cross currents going on. It seems to me, and this is certainly not some wacky view that I have. I think that and other people smarter than me think that the tariffs are a stick to bring other countries to the table, namely China, and the that the goal of this is to get a multilateral currency accord put in place. People are calling it the Mar-a-Lago Accord, colloquially like the Plaza Accord in the 80s. So there is some historical precedent to this, and that this would be some sort of structural devaluing of the dollar, mostly against the yuan. That's kind of the big one. You get that, everybody else is going to fall in line anyways. A lot of the countries are going to do whatever we say, regardless kind of what we say. And then if you get China on board, then they're really going to do whatever so it's really mostly a China thing. And I think that makes a lot of sense. Stephen, I can't remember this guy's name, the guy that just got named chairman of the Council of Economic Advisors, he wrote a paper outlining this. There was basically, he wrote this paper to try and get the job, and then he got the job like 5 weeks after he wrote the paper. He also did a podcast with Felix. Is that On the Margin? Is that the name of his podcast? Yes. With Blockworks? Yes. Yeah, great podcast. I think this was in December. And he lays out this paper that he wrote. You can read the paper, listen to the podcast. Very interesting. I've kind of adopted that as my base case view because I can't think of a sort of, I don't know, it just seems quite likely. It also is very, if you think about how the way Trump is as a person, I mean, hitting some like home run multilateral currency agreement at fucking Mar-a-Lago, like this is, come on, there's nothing more Trump than this. Isn't it? So ridiculously on brand, right? So I really think, I think it really does just solve a lot of this. You hear Trump over, I don't know how much Trump you listen to. Certainly over the last couple of months, I've listened to a tremendous amount of Trump, way more than I ever have before in my life. And he talks a lot about basically America is doing all of these favors for the rest of the world, and we're not getting enough back. We're doing too many favors, and we're not getting enough back in return, and we got to even that out. And that can mean a lot of different things, but one of the things that he is referring to, and he's not going to, you know how he communicates. He has this very elementary way of communication, but it's also obviously he has a masterful but very, very sort of interesting elementary way of communicating. And so he's not going to get into the details of trade deficits and currency, this and that. He doesn't talk like that. He just says, we're doing too many favors to everybody else, and MAGA, baby, make America great again. So we got to get some more, we got to even these scales out. He talks about this all the time. And this is one of the things that he's talking about. This also leads to the ability to have onshoring and to secure our supply chain, right? Big things, especially securing the supply chain, big things, but also onshoring. They're serious about both those. Mathematically, the Dixie has to be lower or that math don't math. You know what I mean? And so the way to do that is to have this multilateral currency accord. The paper also talks about adding in some language around treasury market stabilization because China obviously owns a lot of treasuries. And so they'll come to this is also not hard to do, to just everybody gets together and you go, we're not going to collapse the treasury market because if we do, everybody's in a ton of trouble. Okay, great. So that's going to be a huge one.
I don't really is a bit of a restructuring of the monetary system, isn't it? And we're kind of watching that happen,
right.
Which is obviously an enormous feature. And the other thing that I've been talking about for a while is that I think Trump is going to be good for Americans, whereas I think previous administrations were good for America, which is more or less the borders and Washington. And this is a flipping around. So it's that shorter term pain. We're going to have to deal with some shakeup. But if you make Americans better off, then the long-term outcome is it'll be better for America.
Yeah, and I think you touched on a really great point, which is the near-term pain. And I think that's a concept worth thinking about Trump's willingness to do any of that and to what degree, and the American people's willingness to accept any of that, to what degree, over what time frame. I don't know. My guess is that Trump and the folks closest to him on the economic side, Bessent, namely, but others, they're trying to figure a way to do this with the minimum amount of pain possible. And I think pain means high uninflation, high unemployment, slow or negative GDP growth, asset prices go down.
So somewhat of a stagflationary type environment.
Just some combination of those things. I mean, Trump considers where the S&P 500 is. This is a key performance indicator for Donald Trump, without a doubt. And one of the single most bullish things about this Trump administration is that I think the price of Bitcoin is also one of those for him now. He's tweeted about it and talked about it multiple times. He's got Bitcoiners all around him. I don't have to rehash all of the things that he has said leading up to the election and around, favorable things for Bitcoin and crypto. We all know this. So the question is what is the goal of, it's sort of like outside of this currency agreement that structurally lowers the dollar, mostly against the yuan, but the Dixie broadly. What does this do? It brings on onshoring. It brings on supply chain security, gets our trade debt balance more in a sustainable level kind of thing. Smooths out the treasury market. We got plenty of treasuries we got to issue. Can't have a hiccup there. So it's that. But then there's other things, a lot around the debt and the deficit levels, right? And this is what Doge is going after. And Scott Bessent has talked a lot about this 3-3-3 plan. I don't know if you've heard about this, right? This is 3% real GDP growth, getting the deficit to GDP back down to 3%. So 3% is 3% of GDP, get the deficit back down there.
And it's running at about 7 or so now, isn't it?
I think now it's probably high fives, or I don't know, somewhere. It got as high as 7 at the peak, and I think it's come in a point or two from there. You can just look it up on Fred. And so there's and then the other one is 3 million barrels a day of additional domestic oil production. And so you kind of think about all these, there's other stuff they want to do. Obviously, on the economic side, they want to not tax tips. They want to not tax overtime. You think about those two things. Those are two of the most inflationary things I can think of to do. If you think of like tip of the spear, you do that and the money probably immediately goes into the economy. Just when you think about the nature of not taxing tips and overtime, it's not, when you give a rich guy more money, the velocity of the money slows down and it may not flow through into goods and services. Not taxing tips and overtime probably, this is very inflationary on the margin. So there's that. There's pulling, I think over some amount of time, pulling millions of illegal aliens out of the workforce. What does that do? And then there's, they've taken a chainsaw now to the federal budget, right? And the federal headcount. And how much are they going to get out of this thing? I mean, I heard Elon say that he thinks next year, he tweeted or talked about this. He said he thought they could get $1 trillion out of the deficit. The deficit's only $2 trillion. Cut $1 trillion out, right? So you think it's like, what would that? And I'll for very simplistic numbers. Government spending is 25% of US GDP. Huge number.
Massive.
So then
it's like that here in Australia too. It's just, you look at the numbers, this doesn't make sense. It can't be.
Yeah. I can't remember the exact, something like 30-ish%, 40, maybe 30, 45% of jobs created last year in the United States were public sector jobs. So, what is this going to mean for inflation and for economic growth levels? Very simplistically, if the U.S. government is 25% of GDP and you cut 10% of spending, simplistically, that's a 2.5% cut to GDP, also known as a very significant recession, right? Now, I think a lot of what we're seeing that's coming out from Doge so far is that a ton of this is spending that happens outside of the borders of the United States, and a ton of it is not the kind of thing that goes into GDP calculations, and it's something akin to sort of, even at best, maybe it's just going out back and setting the money on fire. And at worst, it's like, I don't know, kind of like terrorism that the United States is doing to other countries, destabilizing regimes, and just like, it's crazy woke stuff. Foreign woke does not come into the United States GDP, right? So maybe there's so much egregious waste that they can cut a lot out of the deficit, and then maybe it doesn't hit GDP that much. And maybe what they're thinking is, if we cut regulations fast enough that like privates and cutting regulations and then just private sector incentivization in various different forms, then maybe you can kind of like get the growth that way that kind of evens out all that you're taking out of the federal budget. And it seems like it's going to be their job to kind of generally balance out those things so that there's not too much pain to, the U.S. consumer, unemployment, asset prices, S&P, that kind of thing.
G'day, folks. I just want to give you a very quick update of what we're doing over at the Check on Chain project. If you head over to checkonchain.com, you'll find that we've got 3 core product lines. The first is our charting website, and you'll find just about every Bitcoin chart you could possibly want, from on-chain to technical, ETFs, derivatives, MicroStrategy. Now, these are all charts that I've constructed for my own analysis. I use them in my newsletter all the time, and they're all available for free. So head over to our charting website if you pretty much want to find any Bitcoin data that you're looking for. Now, for our newsletter, we have 2 tiers. For our paid tier, we do 2 updates per week. And this includes everything from market analysis, what I believe is going on at the moment, different fundamental pieces about how I think about data and how I think about Bitcoin's market structure, and also more fundamentals like masterclasses, how to think about different on-chain tools and how to use them and how I personally use them in my own Bitcoin experience. Now, our final tier is Check on Chain Orange, and that includes a monthly slide deck, which is where I do some of my deepest thinking and really look ahead to try and see what may be coming over the horizon. We do a monthly conference call where all Orange members are invited. People can invite one guest, and we also talk through all the different dynamics in the slide deck, and it's a bit more of an open forum and an open discussion. Now, each Orange member also gets a half-hour call with myself and Alec, my business partner, where we can talk about what your goals are and how we at Check on Chain can best help you, but also just to put a name to a face and get that more personal experience going. So I hope you head over to checkonchain.com, check out the work that we're doing. Without further ado, let's get back to the episode. It's really interesting because the scale of what's changing is obviously mammoth. But what I've found really interesting, let's just go back to 2022, the raising of interest rates at the fastest rate. The world seems to have handled it. Yeah, we got a bear market in 2022 when everything sold off, but the world is still ticking around. Bitcoin's near all-time highs. S&P is near all-time highs. It's one of those really interesting times that I don't think anyone expected the resiliency that we have seen. And this is not just the US. Like, the rest of the world's probably in a far worse position, but it's not completely cratering. And I find this maybe it's the hangover from all the money in COVID. That's probably a big part of it. But it's really interesting how resilient all of these markets have been, and just the economy in general, given the amount of shocks, which are very, very large, that have hit all of these spaces.
Totally agree. The earliest person that I saw talking about this was Lynn Alden, who is, amazing. And it's basically the view that when you get debt to GDP, deficit spending to GDP levels to a certain point, that high interest rates actually start to be stimulative.
Yes, because you're basically putting money into bondholders' pockets.
Right, yeah. And that's why it kind of felt backwards relative to what we were kind of all expecting. Because I completely agree with you. I felt the same way when we started tightening. I know I have tweets and in my monthly letters and on podcasts and stuff like that, I remember clearly saying, I was like, they are not going to be able to raise interest rates very much for very long until they break this whole thing, because they pump so much money into it that we can never have sustainable. I remember thinking that and writing that, saying that publicly. And that, to your point, was just not at all what happened. And I think, I don't know how early I saw Lynn talking about that, but it was quite early and before I think I saw other people really, really talking about it. And it seems like that's kind of what happened. And there's just a lot of, sometimes when I get like macro bearish, I just go and look at the money market fund AUM, that chart, it's on Fred.
Yes.
I think is it 6 trillion? Is that what it is?
It's some crazy
right now. Yeah, it's like,
I think this is Lynn's perspective, right? She's so bearish that she's bullish because you look at all these dynamics. It's like, I mean, look, there's just so much cash still out there to mobilize and move around. It's, Yeah,
exactly. So it's like, I don't know, maybe there's going to be a big macro topping in asset prices, but I kind of doubt it's going to be when there's $6 trillion in money market accounts. I don't know, simplistically, but yeah.
Yeah, no, it's an interesting dynamic. So, like, what we've seen this year, particularly gold, I think, is probably one of the best performing assets in the world at the moment, which I find really interesting. Bitcoin, I mean, yeah, it's down today, but at the moment, I just think it's holding up. It's incredible. You zoom out to the monthly chart, and the thing just looks spectacular, in my view, right? We could even go down to 75, and I wouldn't be that concerned about the bull. I actually think it's in really good shape. And that, to me, I think sends a really interesting story because there's obviously, you were talking about the treasury market and dysfunction, which they're going to try and avoid. There's been talk of like these century bonds, which I think is a really interesting idea, and I've been kind of mulling that over. But then you've also got your pristine collaterals, your gold and your Bitcoin, which are kind of separate. How are you thinking about that base layer of the core collateral, right? Whether it's treasuries, whether it's gold, whether it's Bitcoin. How are you thinking about those markets at the moment?
Yeah, I won't pretend to know the intricacies of the gold market, but I know, there is a little like conspiracy theory-ish stuff going on right now with the rise of gold prices and, do they have enough physical to back the paper? And, again, I don't really have a view on it, but I know that that's out there. I think it's easy to imagine that the world is sort of getting ready for a very real shakeup on a global basis, and TBD on exactly what that looks like. We just laid out, one option around this currency accord thing, but just, the winds of change are blowing, and that's definitely true on the economic side. And I do think that there is one way. So let's see here. Bitcoin is a non-sovereign, hard cap supply, global, immutable, decentralized digital store of value. It's an insurance policy against monetary and fiscal policy irresponsibility from central banks and governments globally. Said that like hundreds of times.
I was actually hoping to get one of those out of you.
Over the years. And I've said this a lot of times, in my view, you need increasingly more egregious monetary and fiscal policy to act as a forcing function into this new alternative store of value that used to be how you bought drugs on the internet, right? Now we've come a very long way from there, but it is this kind of wacky thing. We've been using gold to store value for 5,000 years, and treasuries are the global collateral foundation of this debt-laden financial system that we find ourselves in. Okay. So, one way to view what's going on with America right now is that you are taking pressure off. You could actually argue, and everybody knows how big of a fan I am of Bitcoin. You could argue that this is actually detracting from Bitcoin's value proposition as an alternative store of value against U.S. treasuries as the global collateral foundation and the U.S. dollar as the world reserve currency, because the long-term health meter of those two things is in the midst of at least potentially drastically improving relative to the way that ship is. That's a big ship. We're turning a big ship right now that we're trying to do. And so, and if you're buying 10-year and 30-year bonds, you're thinking about stuff this is a multi-decade timeline horizon that people look at treasuries, long treasuries, long into the curve on. And so, and you can really look at what we're doing right now and you go, wow, America, we might have another 100 years in us the way things, if this goes right, because we're just in the, potentially making things look so much better. And it's like, does that make Bitcoin less valuable? And you hold that in one hand, and then it's like on the other hand, you have like an unimaginably supportive administration, right? For Bitcoin, and maybe we can get into Bitcoin strategic reserve talk if you want to, TBD on exactly what happens there. But obviously, an unbelievably supportive, U.S. Administration and regulatory environment now, and Wall Street and Larry Fink and all this stuff, right? So it's like how exactly that shakes out. I think, I don't know. I don't have a super strong view on it. I mean, I continue to just, I think, generally believe that central bank balance sheets are going to continue to expand. M2 money supply globally is going to continue to expand. And if that's true, then Bitcoin is purpose built to accrue an outsized portion of that growth, basically. Like it's purpose built to just get some multiplier on M2 money supply and central bank balance sheet growth. And maybe those things grow a little faster or a little slower, but I don't think that changes. And then, I do think over a multi-decade time horizon for Bitcoin, pristine collateral is another moniker that I love for Bitcoin. I like it more than digital gold. And like I said, treasuries may be getting a lot healthier here, but I think it is, when I just kind of look at the stuff that like BlackRock and just Wall Street in general, these guys are so slow, but just State Street and BNY Mellon and this kind of stuff, I do think that over a decade plus time horizon, Bitcoin slowly maneuvering itself into sort of co-chair collateral foundation along with treasuries. That still looks good to me. And if that's true, this thing's gonna go to 500,000, it's going to go to 1 million, and then it's going to be fine, right?
Yeah, no, that's my general view as well. And like it's the bear case for Bitcoin as a fiscally responsible government. But as we know, these things are usually, they're temporary, right? You're going to have this wave of Doge. By next year, they're going to be focusing on the next wave of elections. Things will slow down. Governments love to spend money. Fiat continues to get debased. So it's one of those things. I've been of the 2025 is probably going to be a choppy year. I think a lot of people look at the cycles, and this is probably where I want to take the conversation next, is how this cycle has changed and evolved and been different. Because a lot of people expect this to be the parabolic 2017-esque type year. And my view is I think it's going to be a positive year for Bitcoin, but I'm not expecting just a runaway price because the world's got to just deal with this change, right? The winds of change. So how have you been thinking about, and what tools are you kind of looking at to understand this cycle relative to previous cycles? I know you've been in the on-chain space for some time. I mentioned before the call, you've got the Kana and Katana site, which Lord knows how many PDFs I've downloaded for them. And I was flying around Europe and I was living in London, reading all of those. And my friends are like, what are you doing? I'm like, I don't know, but it seems important. But how do you think about all of this, like the cyclical behavior of Bitcoin? Is this cycle different? Like I'm of the view, if there's a cycle that's going to be different, it's probably this one.
Yeah, I appreciate the kind words too. Let's see here. Where do I want to start with this? So Bitcoin is now huge. That's the first thing I'll say. It's huge. So the sheer amount of inflows that's required to take an asset from $1.5 trillion to $2 trillion. I mean, that just takes a enormous amount of dollars that you're shoving into this thing. And then from 2 trillion to 2.5 trillion to 3 trillion, and just for simple round numbers, when BTC is 100K, it's a $2 trillion asset, right? That's, round numbers. And so I think it is very important to think about sort of price targets and percentage gains. You need to frame it like that. Mm-hmm. And the only other place to sort of look for any kind of corollary here is NVIDIA, basically NVIDIA. You can look at Microsoft as well too. And you can just kind of see, okay, that's what it looks like when an asset goes from 1 trillion to 2 trillion to 3 trillion. And that is how many people have to own it. And in the kind of size that you're talking about people owning and buying NVIDIA and Microsoft, that's what it takes. Now, price discovery for Bitcoin isn't exactly like price discovery for NVIDIA or for Microsoft, but it's getting more like that every day. I can tell you that. But it is quite different. And so I think that would be the first thing I would say. I think the second thing I would say is Bitcoin has never been more divorced from the rest of crypto than it is right now.
It's fascinating to watch. I actually didn't expect it to happen this quickly. I thought there'd be another cycle where it would take institutions a chance to kind of burn their hand a bit, but the divergence is remarkable. And for a quick stat on that, Bitcoin's intraday market cap swings is the same as Solana when it was at its all-time high. So it moves a whole Solana every day, intraday. And it used to move at the top of the 21 cycle, 5% of Ethereum. It's now moving 20% of an Ethereum every day, which is insane.
I haven't heard that stat. That is a great way to frame it, actually. I love that. Yeah, that's, as you know, like people like to talk about BTC dominance, but it's like a super dirty, it's like hardly helpful. It has so much noise in it, you know. Yes. The way you just said it, that's a lot better way to think about it.
Here's another fun fact. If you take the soon to be mined supply left for Bitcoin and you give it a market cap, it's the 5th biggest crypto asset. It might actually be higher than that now that you've had a sell off. Yeah,
that's a great way to think about it as well too. Yeah. And so Bitcoin's never been more separated from the rest of crypto. Its value proposition, there is no crypto that is in competition with Bitcoin. There was a window, the ETH ultrasound money window back at the peak of last cycle, the peak of ETH BTC last cycle. There were a lot of people talking about this. And then you had the big Alt L1 trade that was coming behind it, led by Solana. And then, ultrasound, this is just not a kind of thesis that kind of holds any water anymore. And who knows, maybe things can change. But I think we all know that ETH is doing a lot of soul searching right now as a technology, as a community, as a value proposition, doing a lot of soul searching right now. Especially relative to its market cap. And so I think the 4-year cycle, I thought it was a little disingenuous in 2020. And the reason I thought that was because what actually happened is the Fed did $3 trillion of QE in 6 weeks, and they sent everybody mailbox money. And then the halving happened, and then Paul Tudor Jones wrote a letter about Bitcoin being the fastest horse. And then a few months later, this guy, Michael Saylor, nobody ever heard of, this also ran this tiny, publicly traded company nobody ever heard of, starts buying Bitcoin, and we all know what happened next, right?
And the missing piece I think a lot of people don't talk about is GBTC hoovering up 660,000 Bitcoin in 4 months.
Yes.
Right? Yeah. And the moment that thing went into a discount, that was all over Red Rover.
Yes. Yeah. So great point. What I would say is like, was it the halving or was it all those other things that we just mentioned? So I'd say it was all the other things really mostly that we mentioned. And so then you fast forward to this time around, and as it turns out, you got spot Bitcoin ETFs right before you had a halving. And to try and separate those two things, and also right before the Fed started cutting interest rates. It wasn't QE, but it was the end of a tightening cycle. And so you kind of roll all that up together. Oh, and then we got, a president and an administration that, so again, it's totally, muddied the waters on is this the halving. In my view, and when you just think about stock to flow, right, it would make all the sense in the world. And so I don't think of it really in kind of 4-year cycles anymore, halving related cycles. I think it's much more macro related, and we've just happened to have, these macro type of events or big positive idiosyncratic crypto events like ETFs or like the Trump administration that have lined up with these things. Then I think the other thing I would just mention is from like a price target, where's Bitcoin going kind of thing. Whether or not you think the US government is about to buy Bitcoin, that should have an enormous impact on any kind of price target that you have for this cycle. That's how I think about it. If they buy Bitcoin or if they don't, those are two very different numbers for me.
The way I look at that is if they do buy, congratulations, you all stacked as hard as you could, because that's just number go up forever. If they don't, that's really, for me, that's the more interesting scenario, because that's when the steam comes out of the market. And there's even been some chatter about that today. Like, my view was always the strategic reserve at a top-down level, buying like 1 million Bitcoin. I think that was very, very low probability. What I do think is there's like a Bitcoin strategic reserve from within. Allow the companies, allow the individuals, allow the Americans to say it is safe for you to own this thing. You should buy this thing and have it in your portfolios, and then you actually get a wealth effect from inside rather than from top down. That's the way I think is probably the more likely and actually probably the more positive and constructive method.
Yeah, I agree with both of those. Yeah, it's there's like do you think the government's going to buy Bitcoin? That's one question. I agree with you. Low likelihood, not a zero. I think it's a low likelihood. I'd probably put it at 20%. And then it's like, should the U.S. government buy Bitcoin, which is in some ways kind of the more interesting question.
Agreed.
And it's I understand arguments, I think, on both sides of that. And I think I'll just kind of refrain from, because I understand arguments on both sides. I don't feel like super strongly about the should. Yeah. But yeah.
Yeah, so there's kind of two things that I want to pick up on. One, the 2021 cycle, I see a lot of people talk about it being a truncated cycle. And this is a really interesting topic. I've been meaning to write about this for some time, but my view is that when that GBTC bid evaporated, that was when you lost an enormous spot bid. And for whatever reason, people were buying it. There was the block fires, there was the 3ACs, there was all this stuff going on. There was a huge leverage buy of Bitcoin into that product. And I just think that when China banned all those miners, that was the final icing on the cake. That was the excuse that markets needed to sell off. And then I think FTX stepped in, and because if you look at Bitcoin's on-chain transaction volume, they were representing an enormous chunk of it during that second rally. And there was a lot of on-chain metrics that just showed the chain wasn't healthy. So that second rally, I think, was quite manufactured. And then we obviously had the bear market that followed and the big deleveraging. That's my kind of broad picture of 2021. Have you got any thoughts on how that cycle shaped out? Because I think it's changed a lot of people's views, probably based on the wrong assumptions.
I do agree that FTX was probably a very significant driver of the second bubble, the kind of double top that happened in fall. But I would also say macro mattered a lot.
Yes.
The day after Thanksgiving in 2021, Jerome Powell said it's time to retire the word transitory. And when talking about inflation, if you remember, inflation's transitory. We can leave QE going longer. We can leave rates low longer because inflation's transitory. Day after Thanksgiving, 2021, time to retire the word inflationary, down only after that. And then I think you also just had, let's see if I can get this phrase I came up with right. You had so much fraudulent lending. You had so much reckless lending intertwined with fraud used to heavily lever long to speculate on vaporware. That thing was so present in that market, which we came to find out in 2022, the degree to which that was present, that when you pull that away, I think it's really hard to be like, what actually happened in that cycle? I think it's just really hard. It's like flying an airplane in heavy cloud and somebody asks you to describe what the land looks like underneath you. You just can't see it. You can't see it. And so, the things that made 2021 exciting, you also had, the money printing, right? Let's not forget the degree to which the money printer went burr, right?
And it takes time to filter through the economy too. That's not one and done. That takes months to years to filter through. Totally.
And if you just go, okay, DeFi, was that real? NFTs, was that real? GameFi, was that real? The Alt L1 bonanza, was that real? All right, remove all the fraud, lending, that whole thing, sort of like what's left there. I think what I would say is just a lot less actually happened than the way it kind of initially looked and felt when you were in it in the moment or in the months and quarters thereafter, when you get a good amount of hindsight, especially the hindsight after 2022. Yes. And then when you get 23 and 24 and you've kind of watched what has happened since then in the alt market broadly, like I said, BTC's been very separate with its own. BlackRock filed the ETF the second week of June in 2023. And it's like, it's been an ETF market for Bitcoin since then, basically, right? And then for 6 months before the election, it was a Trump market as well, too, right? But for the alt market, it's like, I think you've just seen broadly real lack of any kind of broad-based sustained inflows into alts, and you've had a dearth of narratives and that people are really rallying around significantly over a multi-quarter, year-plus long time frame. People are just not buying it, basically. And then that's pushed us towards, the nihilistic meme coin mania, right? That has been a direct response to the lack of compelling use cases, solving real world problems with alts, solutions, finding problems, and then gaining mass adoption because the world's like, damn, this is just a good thing, a nice product. I'm going to use it. So people do that and then number go up. We've had a real lack of that over the last 2 years. Future doesn't look that bright the way I'm looking at it for 2025. I don't know if you see some stuff on the alt landscape that you're like super pumped about. I don't. Not right now.
I ran this study recently where I took the top 1,000 tokens and I just tried to look at, imagine like an oscillator showing how many of them have hit these benchmarks above their 200-day moving average, are seeing an inflow to the realized cap, which I use for the capital flows over a 30-day period. MVRV is above 1, meaning the average guy is in profit, and supply and profit is more than 50%. So these aren't things where like you're killing it. These are things where you're just not completely dog shit. And if you go back to the 2021 cycle, there was this multi-month, year-long structural uptrend, and then they all crested, right? 75% of all tokens are in that bucket. This time, you're barely getting 50% of tokens into non-bearish, and it's these like wicks. It comes up and then it just shits the bed, comes up, shits the bed. And we've had 3 of these waves so far. And this is the top 1,000 tokens. So it's a crude measure, but it is a structurally different system. And it is this just divergence. And I found the ETH BTC ratio fascinating because Sol BTC looks just like it. Looks exactly the same chart, just coming up either post-merge or coming up to the merge, one of the two. And I had a chart that I released on my subs that I just called, here's Ethereum, and I circled that box of sideways consolidation. There's the merge. And for Solana, there's the meme, right? How do you get a bigger meme than Trump? How do you get a bigger shockwave than the Harvey MLA thing with Libra? I'm like, there goes your marginal demand for really the only token that's performed next to Bitcoin at any kind of serious size.
Yeah, specifically with that's a sick metric that you were just talking about. That's real. Can I go to your Substack and see that?
I'll flick you the slide deck. Yep,
that's super cool. The Sol ETH versus Sol ETH versus ETH BTC, super interesting comparison as it relates to meme coin mania. I think with the market, I've been talking about this for months. I don't know when I first started talking about this publicly. Over the last month, again, we're only 1 month into Trump coin, right? Or a month and a week into Trump coin, and everything that happened after that with the apex maybe being Javier Milei. But it seems like what people are coming around to pretty quickly right now is just how negative pump fun is and how extractive, just like stunningly extractive. And it's after the Bybit hack with North Korea, now people are starting to dig into how much activity has North Korea been doing on pump fund. Like if we now had a plus token-esque, the way that was juicing BTC, was some very meaningful portion of pump fund mania, actually Lazarus Group. They're the best in the world at this. The best in the world at this shit, So a part of that is it's still conjecture right now, and they are very good at covering their tracks. So TBD on whether or not Zach XBT or somebody else is going to be able to put together a compelling on-chain case for Lazarus being some real meaningful portion of the pump fund dark market. But they're already starting to connect some of these dots. I don't know if you've seen that. But
unreal. No, I haven't heard this. This is wild.
And so now we're just talking about like, what is the benefit of pump fund? Like, what are we really doing here? As an ecosystem, what are we doing here? And I think people are starting to. I've been banging this drum for a while. I've been banging this drum, and people I think are starting to kind of come more around to kind of understanding this and understanding just last year, the pitch of Solana to institutional investors was that this is the casino, and who doesn't want to own the casino? You want to own the casino. Casinos, these are great businesses. Solana's the casino, so just own the casino. Okay. I'm not a person that wants to be a casino investor.
No.
I'm just not trying to do that with my life. Like, I don't want to, that's not what I want to do with my life, kind of thing. Yeah. But if other people want to, institutional investors just trying to get a return, own the casino, okay, fine. I think that the meme coin stuff has gotten so negative so quickly now, recently, that people are starting to kind of rethink that as a investment thesis as well, too. Like, okay, well, this is a really shitty casino that's so extractive that it's like the vine that's wrapped around the tree. It's going to kill the tree. It's going to kill the whole tree. It's so extractive, you know? And so TBD exactly on you know, kind of what happens there. What would obviously really help is if we could just get people really using alts for their real world use cases. Like,
so out of interest, having been in this market for a long time, because I've, over many years, you know, I've spent my time in DeFi. I've used Ethereum for many years. I've used Solana. I've eventually just come back and gone, I mean, Bitcoin makes all the sense in the world because I know it's going to be there when I need it in the future. Stable coins, I can see, I mean, there's undeniably use case there. Yes, I mean, the one thing that I've always thought kind of had that long-term product market fit, something like a Compound or an Aave, it's basically a, what do you call it? It's a repo facility, right? I'm going to put one asset in, borrow cash, put cash in, borrow asset. So to me, that like structure makes sense. But man, is there anything else out there that you've seen that goes, there's actually product market fit for this stuff? Because I struggle to, and that was I wrote a case on Ethereum. My reason why I finally exited is I actually just don't need any of this shit. There's none of these products that I truly demand that improve my life. And when I was really honest with myself, what did I use all that stuff for? It was to get cheap leverage. That was to bet on more tokens and number go up. That's actually what I used it for. And I know that's what finance does, but like that's where I've settled in this whole journey.
I agree with that on DeFi. I also just think that providing KYC free financial services and that being your core value proposition, I'm not entirely sure if that can hold up to a kind of regulatory scrutiny long-term type of stuff. Now, with the Trump administration, it seems like it's a lot safer, but there's the way to think about it is it's like if Lazarus and the other biggest enemies of the United States are doing enough size through this stuff, the US government just can't ignore that. And, you know, you can hate that or you can love that, but it just seems like that's the way that's going. And maybe that changes. You know, the Tornado Cash, they just had an announcement on Tornado Cash where they dismissed criminal charges against the devs? Is that what they did? I believe
so. Yeah, which was good news.
Yeah, which is good news. So maybe the U.S. government under a Trump administration is just going to look at this and they're going to go, this feels like free speech, First Amendment, right to financial freedom type of stuff. And if there's a lot of bad actors moving money through this thing, we're just got to figure out some way to get them on where they go next, you know, like catch them at some other gate kind of thing, because we like freedom and we want to have people have the right to have KYC free financial services. Maybe that'd be a great thing. I'd be a fan of that. So I would say that on DeFi. To your point about like, is it really just cheap leverage or is it just some kind of yield farming, whether it's like egregious farming like we did with the, you know, sushi and yams and all the food farming, or whether it's just sort of like, oh, I can get, you know, 20% yield and you can't get that anywhere else and it feels attractive to me, so I'm going to put some money into it because I'm like okay with the smart contract risk or whatever, like, you know. So I agree with the way you framed DeFi. On stable coins, agree. Product market, this is what I talk about all the time.
Undeniable.
Bitcoin has product market fit, stable coins have product market fit, and everything else is a solution looking for a problem at best or outright vaporware grift. You know, it's somewhere between those two goalposts, basically. Between
tough,
after, yeah, it is tough. It's very tough. I dedicated 7 years of my life to this shit. It's tough, you know. Bitcoin and stablecoins. What I would say about stablecoins is it's like, let's assume that these things just keep proliferating, that the United States loves them, they're pro-dollar, they're pro-world reserve currency, you're dollarizing the entire planet. This is a great
Naturally,
thing
too. The market chose these things, which I find really interesting.
Yeah. And, you go and look at different anecdotal evidence about sort of, you go into countries where there's a lot of currency instability and you ask them what they want. It's like they want $1 on a blockchain more than they want Bitcoin. That's just unequivocally, you hear that time and time again, that there's sort of proof of that. And so then it's like, okay, well, assume that these things continue to proliferate. And what's the market cap of all stablecoins in existence right now? 200?
Yeah, something like that. Getting up to 200, I think.
Yeah, towards 200. Let's say we go to 500 and we go to 1 trillion in 3 or 4 years, and it just keeps going like that. And then it's like, what's the appropriate market cap for the L1 blockchains that are shuttling the stable coins? What's the appropriate market cap for that? Well, the most popular one is a Google sheet that's run by Justin Sun. That's the most popular L1 to move stablecoins. It's Tether on Tron. And if you're trying to save the Africans, the most Africans have been saved with Tether on Tron, a Google sheet run by Justin Sun. What do we think about that? What do we think about that? What do you need decentralization for, and how decentralized is decentralized enough? What we also know is every L1 and L2 and their dog offers stablecoin. You can use anything to shuttle these things, right? I can use some Optimism L2. I can use Solana. I can use I can use Base. I can use, and it's the transactions are fractions of a cent, and it's, and so what is the right market cap for these things, right? And if all they do is shuttle stablecoins, then that seems like it would, put some kind of ceiling on the market cap of these things. And I have definitely entertained the idea. Another thing that I want to talk about that's in this same vein. One thing that people are saying is, we got a Trump administration. We got a new hand of cards. So supportive. We're going to get legislation. SEC's on our side. CFTC's on our side. We got this working group. Everything's great. We're going to get real supportive whether it's executive orders, whether it's rulemaking and settlements and no action letters out of the SEC and the CFTC, and that forms a de facto regulatory framework. And then down the road, we get legislation that matches this de facto regulatory framework. We just got a much more supportive view for this. And that's going to allow for alts to start having security-like features in their token structures. Yield, buyback and burn, these sorts of things that have more compelling and well-established value accrual mechanisms, right? We've been using yield, there's like a PE type of thing, right? Now we've been using this for 100 years. We've been using PE to value securities. And then you start to go look through the alt ecosystem and you start to, okay, well, where are some attractive PEs? Okay, well, for one thing, that's actually really hard to get a clean number on that, because you can't just go to Token Terminal and look at the numbers they give you, because there's a lot of noise in a lot of these numbers, or they're just inaccurate. It's just not an accurate representation of something like a PE, where the E would be available to return to token holders to drive value accrual. So there's that. One, you're not going to find a lot of names, period, they're attractive on a PE basis, period. And then when you find the ones that are attractive, then you drill down, you go, oh, there's noise in the actual number. Or the ones that are attractive, it's actually just a backdoor casino bet. Radium would be the greatest example of this, right? Radium is cheap on a PE basis, but that is only because this is the engine for the meme coin casino. And if the market decides that they don't want to play with that toy anymore, then the attractive PE really quickly is no longer attractive, right? And I just wanted to mention that because I think it goes into just sort of, the whole, it's just meaningful because in some ways people are thinking of this as the like, oh, this is the promised land for alts. Once we can finally get yield, security-like features, buybacks and burns, and then this is going to drive the golden era of alts. And I think what I would say is that what it might actually be is maybe not the beginning, but like the third inning of a structural drop in or rise in BTC dominance.
Yes.
That you just sort of look at the $1.5 trillion of market cap, or it's probably closer to a trillion right now. Aggregate alt market cap, $1 trillion. Again, real fake number. It's not even close. It's a very fake number, but just for illustrative purposes, $1 trillion versus 2 trillion on Bitcoin, and that you just get a multi-year. The market's just like, oh, that wasn't the right ratio. That just wasn't even close to the right ratio, and that plays out over a multi-year basis. And I think that, I think there's real potential that may be what we're staring down the barrel of.
I think that's right. I was talking to one of my clients, and he had this great line where he goes, "Be careful what you wish for," because he went through this exact exercise, and he goes, when you actually value these things, everyone's looking. I think you were even talking about this some time back. It's a relative market. People go, "There's Bitcoin. What should Ethereum be worth versus Bitcoin? What should Solana be worth?" When you do a relative thing, you're like, oh, well, this looks really cheap relative to this. It's like, but that just means that you have to go down less than the other one, right? When you actually run some kind of, discounted cash flow on any of this stuff, you're like, we're in PEs of several hundred here. I think even Ethereum, and this is the thing I found really interesting. I find the Ethereum experiment, just because of its size, it's interesting to see the community trying to work out, is 400 billion, is 300 billion, can we justify it today? If we get rid of the ultrasound money meme, which is just pure monetary premium, can we justify this? And the argument often comes back saying, but all the L2s pay for gas. And I'm like, if you really want to price up how much gas is being spent, I think you're not going to like the number, because it's about $100 to $200 ETH price. That's what you're probably, and that's going to get you down to like 20, which is on the upper bound of PEs for expensive companies. And you're like, it's hard to justify these numbers where they are. So I actually agree with that framework.
Yeah. And maybe to give a shorter term bullish side of this, specifically on Solana, I think we're going to get spot Solana ETFs here pretty soon. And I think there's the potential to see meaningful inflows. I think, and maybe one way to frame this is, if the ETH ETFs and Solana ETFs had launched at the same time, like where do you think the inflows would have been on a relative basis?
I said this a while back. If you had have told me this market, if you had have wound back the clock, let's just say 2 years, 3 years, and you said Trump was going to launch a meme coin, which chain would it be on? Undeniably would have been on Ethereum, no question. The fact that it was launched on Solana was a very interesting thorn in the side, because it's like that wouldn't have happened 2-3 years ago, no question.
Yeah. So I think that could be very, very bullish. But then, on the other side of that with Solana, you've got this FTX unlock that's coming just here in like a week, 2 weeks. I can't remember, 11 million units or something. I can't remember the exact numbers. Big number. And I think a good amount of that has been driving this move down in Solana that we've had very, very recently, is just nervousness around this unlock. And, maybe the unlocks, the investors that bought the locked FTX Solana that are about to get 25% of that unlocked and want to sell it, and maybe they're pricing those OTC deals right now, and that's why price is kind of down only, because that price is about to kind of get locked in. It's going to be some discount to some TWAP, and the TWAP is going on right now. And so maybe by the time you actually get there, we've already done the kind of price correction that's happening right now. It certainly would be much more helpful for the market to be able to digest that with Solana if the spot ETFs would come soon. And I don't know exactly when that's going to happen, because you don't know whether or not the SEC still wants CME futures trading first, like the way they did with BTC and that whole route, or whether or not this is a new SEC and they're like, you don't need CME futures, we're just going to do it outright. They've accepted the 19B4s, which starts, I think, 180-day clock, I think.
Yes, I know that.
But that's in 180 days, and crypto might as well be 10,000 years. You know what I mean? So it's like, you need it like in the next 60 days, you need the market to like come to understand quickly that it's coming very quickly, TBD there.
Yeah, it's interesting because it reminds me of when the German government was selling their Bitcoin back last year. We saw it trade for, I think, I'll get the numbers wrong, but from like 65 down to 53. And I actually modeled this out. I looked at when they actually sold. So it was a month-long block. of the 50,000 Bitcoin they sold 10,000 in the first 3 weeks, and the market went from 65 to 53. And then they sold the remaining, it was like 38,000 Bitcoin over a span of 1 week, and the market rallied through it. It's just a great example of just pricing it in beforehand, absorbing it, and then away we go.
Yeah. Yeah.
So we're coming up on time, but just to kind of close out, as you think about Bitcoin in its current environment, from my view, I've been calling this, it's like quiet and trending. It just goes up and it goes sideways. It goes up, it goes sideways. And we've got these interesting periods of chop solidation where it just it's long enough, it doesn't go deep enough to get the bears on side, it goes just high enough to get the bulls hyped up, but ultimately it just goes nowhere. I went back and literally scrolled through the entire price chart of Bitcoin, and I've never seen this price action. The only thing that's even remotely similar is 2019, and even that had a lot more downside, and we had plus token and all those other dynamics. What's your thoughts on how Bitcoin is trading, and if there's any tools or kind of how's your mental model for how Bitcoin is trading now and what to kind of look forward to in the future?
Yeah. So there's less and less of my discretion in our investment process. And that's been true for, so maybe I can take a step back, because I know your listeners are kind of interested in this kind of stuff. So we have been trading Bitcoin systematically with a discretionary overlay since September 2019. The large majority of our AUM has been deployed into this systematic strategy. It used to be BTC, then it was BTC and ETH. Now we trade BTC, ETH, and SOL through this systematic strategy with a discretionary overlay. The discretion is my discretion. The manner and degree of that discretion has ebbed and flowed over that 5.5 year time frame. Generally, directionally, it's been kind of less and less discretion, more and more quant. Purely, you build proprietary statistical models, you hook those directly up to automated execution, trading algorithms, zero of Travis's involvement. And the drivers for those models are a combination of on-chain and on-exchange data. And as you know, there is a tremendous, for one tick of Bitcoin, there is a tremendous amount of data points that are generated for every single tick of Bitcoin. And you can ingest as many of those as you want to, and you can synthesize those, and you can start trying to look for predictive power. And we've just been doing this now for 6 years. We've been doing this. And price discovery has changed a lot for Bitcoin. A lot. And the ETFs have changed it a lot. Mm-hmm. And the easiest way to see this is just in the more shallow pullbacks and in the less aggressive upside moves. Those get capped more quickly. And then another thing I would add into that is also that the cash and carry trade is now available on essentially a risk-free basis. Very
real. And a huge component of ETFs, a huge component of open interest. CME is now bigger than Binance in terms of open interest.
That's right. And the biggest hedge funds in the world are now willing to do this, and they have access to infinity money, essentially. They are prime brokers, go to the Fed window. You know what I mean? It's like if you're 0.72 or you're Millennium and you want to borrow money from, not to get into the nuts and bolts of how big hedge funds work on Wall Street, but it's like you go borrow money from JP Morgan Chase, and JP Morgan Chase gets it directly from the Treasury. It's like that money don't run out. And Millennium will go park that in a cash and carry trade, and in high single digit annualized or low double digit percentage annualizes, they will just do this all day. And people talk about that being like delta neutral, but that does cap the real big jumpy upside moves that you can have.
The way that I've described it is that for the trader, it's delta neutral. But the ETFs are smaller than the futures market, so if they want to exit a cash and carry trade and they've got to sell the ETFs, you've got a less liquid book, it can affect the market. The trader doesn't care, but it can impact the market structure.
Yeah, that's a good way to think about it. Yeah. And so I think what you also have is some very big pool of capital that is willing to buy Bitcoin on dips, at least as long as the macro backdrop is reasonably supportive. We haven't, since the ETFs have launched, we have not been in a negative macro backdrop, directionally negative macro backdrop since the ETFs have launched. We've had small little scares, and I think what we've seen is that at least for those little scares, or whether it's an idiosyncratic scare, Germany, great example. Go back and look at the ETF inflows right around the Germany selling. Big days. In the middle of summer, you got boomers to come off the lake house and buy these big slugs of Bitcoin while that was going on.
$500 million days are the norm, which is just, again,
That's right.
The numbers are insane. And I've been describing Bitcoin. It is now a small fish in a fucking enormous pond.
That's exactly right. The yen carry trade unwind, saw big numbers come in on that puke, right? And so as long as I think, I think we'll see what happens if you get some directional negative. I'll give you a great example. All the stuff that Trump does, CPI turns around. And now we go from low 3s to 3.5. We go from a pause, market starts pricing in rate hikes. You go from 3.5 to 4. Powell shows up one day and you get a real tough press conference and you go, we're not on pause anymore. We got to get this under control. Mm-hmm. Risk hates it. QQQ pukes. Bitcoin pukes. Alt down 50%. It's like you get this big risk off kind of event. And then the Fed fund futures curve is pricing in, 3 hikes over the next 12 months and then flat for the 12 months after that, not a cut in sight. And that becomes where we get into again. And then it's like, okay, now are we seeing, billions and billions coming out of these ETFs, like just a real structural, people don't want to hold this shit anymore. This is like that. Or is it just no inflows? Or is there enough pools of capital that Bitcoin goes down 35%? We have not. I think we've done a 20% peak to 29% peak to trough since the ETFs launched.
The yen carry trade on a wicking basis was 32, but if you draw a straight line on a closing basis, 26 is about as bad as it's been, which is unbelievable. Unbelievable.
There you go. That's right. You and I we all remember 2017. 30. You do a 30%. I'm no reason. You have no reason at all. You do a 30% pullback, right? And funding rate's super high, down 30 on BTC, right? So we haven't gotten anything. Like you said, wick basis, those were all good buys in hindsight, right? All of the ones that have gone down, 20 to 25 to 30% since the ETFs launched, you wanted to buy all of those. So TBD on what would happen if you got into a directionally multi-quarter, year plus long negative macro backdrop. Is 30 not the level anymore? Is it 35? Is it 40? Is it 50? Or as it turns out, these ETFs aren't going to save us from a down 65 in Bitcoin. I don't know. I think it remains to be seen, but that's exactly how I'm thinking about it. It's crystal clear that the price discovery has changed. The marginal buyer and seller, the access to capital, to come in, all that has just changed drastically. And so you really shouldn't be thinking about this because you and I, you like to look at cycle over cycle, all kinds of different cycle over cycle metrics. Whether it's, funding rate, OI type of stuff, or whether it's, on-chain type of stuff. And I just think that these ETFs, and they change stuff so much that I'm not sure how to think about that stuff on the kind of cycle over cycle. But I still look at it on the, on the on-chain side. I still like to look at it just to give me a sense of kind of where I am. And you mostly look at it when stuff is running really hard. And you feel yourself, you kind of feel a little FOMO, like, do I want to, Bitcoin's run hard. Do I want to buy up here? You go look at somebody, we'll wait for a little bit kind of thing.
That's it.
Yeah. So.
And that's what I've certainly used on-chain, not so much for the cycle stuff. Like I think a lot of people, because it's easy, right? They go, but this metric hasn't hit a peak. I actually use it to solve the problem of what investors are doing. Are we seeing buy the dip behavior? Are we seeing locally too much profit taking? Long-term holders continue to sell, so I'm just going to sit back and wait for the market to find its level, and then you can step in. So I think I certainly use it more as a non-cyclical tool set, which I think a lot of people default to. To me, it's a tool. Are people in profit? Are they taking lots of profit? Should I be concerned? Is there some blood in the street? Because if so, I'm a happy buyer.
Yeah, yeah. And those kinds of things are also just nice for, I'm sure you have a lot of like pretty normie friends and you're the Bitcoin guy, right? And probably people listening to this, maybe they're the Bitcoin guy for their friend group, family, and people are always asking them, do I buy some Bitcoin here and this kind of thing? And that type of stuff is just always nice to just, and you could even just do it something as simple as just like, Mayer multiple type of stuff. I tell a lot of people about Mayer multiple and just DCAing, and there's just like really simple. It's always a good time. If you're somebody that earns dollars through a career that's stable, always a good time to DCA. And then there's these periods of time where you just like turn the DCA off for a little bit. And then these periods of time where you just go do it twice, just twice as hard. And you just like, super simple, right?
And it is that simple, right? It doesn't have to be harder than that.
That's right. Yeah. And for so many, and that's just going to work out really well, I think for people. And I'm so much more comfortable recommending something like that for Bitcoin than any kind of alt stuff, any kind of, people I'm sure ask you and people listening, people ask me all the time, what about these alts? It's like hilarious how normies get wrapped up in like fucking Cardano and Ripple. Like it's
I'll
like
never understand the Ripple thing.
Doge and this kind of stuff. And I can never recommend those kinds of things. But that real simple Mayer multiple DCA, turn it off when it's way up here, double down when it's way down there. It's so I can sleep well at night recommending that kind of people to my friends and my family that I really don't want to screw them over.
That's it. No, I think that's about right. And you touched on the drawdown. How far can it go? My kind of framework for this in 2021, we got to 1.2 trillion twice. First time in April, second time when in that second peak, December, November, and we were swiftly rejected both times. We then spent 8 months consolidating above 1.2 trillion. Every time it went below, every dip was bought. And if I think about like if the market goes to 40K, we've completely undone the effect of the ETFs. I think that's improbable. A lot of people look at the realized price. I'm of the view, so Dave Puel and I, we kind of came up with another model called the true market mean. I think we can put the realized price aside. So my base case is we come back to that true market mean. That's about 65K now. That's in terms of a bear market, that feels about right if we did bear from here. And even if we go higher, it might be 70, still feels about right. So that to me feels like a level to just at least pay attention to. Ironically enough, it's also dead on Michael Saylor's cost basis. For whatever reason, cycle after cycle, the more he buys, the more it matches the true market mean. I can envision the bear market bottom. Saylor's NAV goes to 0.8, right? Everyone's blowing up and you're like, well, realized price next, and you're like, looks about right to me.
Yeah. Yeah. That's a great scenario to think about. Yeah. Those are good things to be planning out.
Good stuff, Travis, mate. This was absolutely fantastic. It's been a long time coming. Thanks for your time. And is there any kind of final parting words for people who are just trying to navigate this market? Any tips to just survive as someone in the investing world, and particularly in the Bitcoin world?
Yeah, like I said, Bitcoin's very separate from everything else. Everything else outside of Bitcoin is just, it's just really... Bitcoin is the only non-venture bet in crypto. It has risks to it, but they're not venture investment type of risks. And everything outside of Bitcoin is just kind of a classic venture bet with venture risks and tons of uncertainty and potentially venture type returns. You should just think of it as, like, when you think about like your personal portfolio and where you have different money, different amounts of money in different things, like your altcoin money is like, that's really the money that you go to Vegas with. Like if you like to go to Vegas or you like to bet on, there's been a enormous explosion of sports gambling in the United States. I don't know if that's true over there as well too.
Yes, it is.
But okay, yeah. So it's like a lot of this is this financial nihilism type of stuff. Your altcoin money is like, if you like 5-leg parlays, I'm not recommending you do that. But if you're doing them anyways and you're thinking about peeling a couple $100 off from your 5-leg parlay money to go fire it off into alts, so be it, right? Bitcoin is something very different from that. What percent of your total liquid net worth you should have in Bitcoin depends on your age and your risk profile, but I think at least 5%. I think everybody, my mom, my 72-year-old mother should have 5% of her liquid net worth in Bitcoin, and I think the number moves up from there. I would just tell people, try and be kind to one another. There's a lot of community stuff. We're still, from a community perspective, both Bitcoin's doing some soul searching from a community perspective, and crypto broadly is doing a lot of soul searching from the community, just the people that make up this industry, whether it's people that work full time in it on various different things or people that just spend a lot of time in it, have a huge percent of their net worth in it very actively and, investing in the space. And I would just urge people to try and be kind, but also, we've got to have some accountability and we've got to have an ability to expel bad actors from this space. Bad actors are attracted to crypto like a moth to a flame. And if we just let another great quote from a friend of mine, some of the best people I've ever met in crypto are in crypto, but all of the worst people I've ever met are in crypto. I love that quote, right? We got some of the worst hanging around in here. And we have a track record of allowing these people to get into positions of enormous power and influence where then they go cause tremendous damage into this ecosystem. And if we can't do a better job of identifying and then expelling bad actors from this space, we're in a heap of trouble. The whole thing is we are in trouble. And so, everybody can do different things. Everybody's got a voice and represents different things, this ecosystem. But that is something that it's worthwhile for all of us to try and do our own little part, right? To just try and push this technology towards its potential to make a better place, to make the world a better place. So,
no, that's good parting words, mate. And thanks so much for coming on. It's been a real pleasure.
Yeah.